I remember we were talking a little bit offline a while ago about the different loan products that you have for the short-term rentals, and it's different than you would see in the commercial world, right?
It is. There's similarities and differences for sure. So it's like a hybrid. It's perfectly practical, legal, with inside the regulations to buy a second home at 10% down and rent it on a short-term basis. The technical guideline says something along the lines of, to finance it as a conventional second home, you have to occupy the home at some point during the year, like literally one night, and you've met the criteria, and you could rent it out the other 364 and just stay in your home one night a year. It's also got to be in a different city than you live. Then there's, you could buy something as a primary residence and rent out the rooms. It's perfectly acceptable doctrine. And then after a year of living in it, you can move out and rent out the whole thing. Those are two methods right now. They're just using conventional financing products. And then there are commercial loans available for short-term rentals. You can put down 20 or 25%, and the lender will underwrite the debt service coverage ratio based on short-term rents. Those products are new, and I see lenders, they start doing them and then they stop and then they start again. And there's always a few lenders at any given time right now. And this was unseen when I started originating, and when I started investing in short-term rentals, this was unseen. This is something that I don't think came out until 21 or 22.
Do you have to have a pretty good track record to get these products? Is that kind of how it works? Or they'll give you one, and if you do well and you actually hit your projections, then you're good. I'd imagine there's people in your space that are over projecting, right?
Yeah. So there's a couple tools that these lenders will use to make the projections, and then they'll hit those projections with an expense ratio. And generally, with the last one, I incidentally applied for one the other couple weeks ago, and they wanted my track record. They're not very transparent about what their guidelines say. And depending on the loan officer you actually talk to, they may say you do or don't need a track record. But anytime I've been in underwriting, they want to see my experience.